the South American country's GDP is expected to expand nearly 4% this year and is expected to be the biggest emerging market in Latin America in the next few years. Joining us for a more in-depth look at Mexico is Lyal White. He's director at the Center for Dynamic Markets at GIBS. Lyal, thanks so much for joining us today. And the ambassador there laying out the context pretty nicely for us in terms of what we're looking at when it comes to Mexico right now. I find it really startling to read a line like, some say the competitiveness gap with China is closing. First of all, it shows that it can be done. And secondly, what's surprising is the fact that it's a country like Mexico that's doing it.
Yeah, Mexico has always been very competitive in the area of manufacturing over the years, and that's how it built its competitiveness. You must remember that the growth of China and growth of countries like Brazil, which is also obviously in the Latin American region, they grew off the back of commodity prices. That was over the last 10 years or so through the commodity boom, whereas Mexico had to rely on manufacturing. So I would probably say that through the growth of China, or the competitive advantage that China had over its costing, especially its labor costs in manufacturing, that's when Mexico was challenged in its competitiveness. That story around China is changing slowly, and because of Mexico's competitive advantage in terms of geography and its proximity to the United States, that might allow Mexico to gain an upper hand in getting investment to manufacture for the US market going forward.
Yes, of course, there are certain aspects to the Mexican geographical location, also to its population. It's got a population, I think, of 113 million, Lyal, more than double ours. But on the other hand, there must be some things that they're doing right that we can learn from. Is it policy right from the top? Is it the way that companies do business? I mean, for example, I think between the 16th and the 19th of November, they have the equivalent, the American equivalent of the Mexican equivalent, rather, of the American Black Friday. And that is not just a private enterprise initiative. It's actually the state that initiates that as well, to get people go out and to spend more. I think the simple question is, what can we learn from them?
Yeah, hi Lindsay. There's actually quite a lot to learn from Mexico. It's a country that was confronted with the need to perhaps reinvent itself and to confront some of its social and even security challenges, as we heard before on the drug cartels, etc. And it's had to encapsulate all of that to ensure that it remains competitive. So in reinventing itself, it had to make sure that it was competitive in the global economy and confront big players like China, Chinese cheap manufacturers. And in so doing, it pulled business and policymakers closer together to ensure that its companies and the country itself was more competitive. It's lowered, or perhaps let's say that manufacturing costs have not increased as quickly as other places around the world. In China, we've seen manufacturing costs increase by 3- or 4-fold over the last decade, whereas Mexico has not increased as quickly. And by 2018, Mexico will regain its position as the largest exporter to the United States. We've also heard, as the ambassador mentioned before, that Mexico currently trades over $1 billion a day with the United States. And that accounts for more than 4/5 of Mexico's export market, really. So obviously the health of the Mexican economy depends largely on the US, which is sometimes concerning considering the state of the US economy at the moment. But in terms of generating greater competitiveness within the economy and to build social programs as well slotted into that, I believe that we've seen greater policy coherence and a bigger buy-in from the private sector in Mexico, which is very instructive for countries like South Africa.
When it comes to a policy and what's given it some of the competitive edge being highlighted is that we've seen that competitive advantage being charged by a weak peso policy as well. That the one consideration to be made, and then it's also has a more free trade agreements with other countries than any other nation in the world. So, those are positions that can easily be unwound. Just how risky a scenario are we looking at?
Yeah, you highlight a very, very important point. Mexico has bought into and has really signed up very firmly to the whole idea of liberalizing its economy. It is the only large economy that depends so heavily on trade. And as you mentioned, it's got more trade agreements or more free trade agreements than any other country in the world. It's got about 44, I believe. And this is quite phenomenal. Another country that is of this nature is Chile, but Chile is a much smaller economy. So it is vulnerable to what takes place in its principal trading partners, that being the United States and Europe. But by the same token, it forces them to continually be competitive and to improve its competitiveness vis-a-vis others. So it doesn't rely on commodity booms and natural resources. Even though Mexico is one of the largest producers of oil in the world, it does rely more and more on manufacturing and building a manufacturing base and advancing or evolving this manufacturing base to high-end products. So that's the strategy in Mexico. It is under threat in many respects, and it might have to diversify its trade partners somewhat and maybe look further south, look into Latin America, because that is very, very important, because those are where the markets are growing for Mexican exports going forward.
It's almost as though you're suggesting that South Africa, with its resource-rich economy, and we haven't exactly taken advantage of that to the full, but it's almost as though that resource richness has been a ball and chain to South Africa, and if we didn't have it, we might be forced to do what Mexico has done, and that is focus on manufacturing with great success. So perhaps we could combine the two. We're lucky enough to have what we have, but maybe we could adopt the Mexican policies in this country to boost the sector of the economy that I've just mentioned, which is only 16 to 17% of total GDP.
Yes, I think without resources, or the lack of natural resources, which we have also seen in Southeast Asian economies, a country is forced to build its own competitive advantage, not to rely purely on what we call comparative advantage in the field of economics. So I would say, and I agree with you here, Lindsay, that South Africa has rested on its laurels in many respects and rested on the notion of comparative advantage in natural resources. We are probably the most resource-rich country to have not taken advantage of the commodity boom. So where we can learn from Mexico, even though Mexico only grew by, I think, 1.6% over the last 10 years throughout the commodity boom, it's now going to ride the wave of the competitiveness that it's had to that it's developed over those last 10 years. And it's going to grow by double the pace of Brazil this year. It's going to grow by over 4% this year. For an economy the size of Mexico, I believe Mexico is probably in the region of about $1.5 trillion. To grow by in excess of 4% is quite phenomenal. So all these downsides of Mexico that, they've seen 60,000 deaths over the last 6 years, yes, this is horrendous when you hear about this, but we should never forget the progress that has taken place both socially and economically in Mexico, and how it's integrated itself very effectively in the global economy. And very importantly, Mexico is a country that buys into the notion of connectedness. It is connected in terms of trade, capital, and people. It really, really does buy into the movement of goods and services and people. And the movement of people is probably the biggest economic multiplier for any country.